On this episode of Exactly How, you're going to learn how to overcome lack of experience as a real estate investor, how to raise money and partner yourself to success on this episode of Exactly How.
You're listening to the Exactly How podcast, where you'll hear the underground, closely guarded wealth building secrets of successful people around the globe. Discover exactly how to improve your mental, physical, and financial health. Feel better, make more money, live, give, and prosper in today's exciting, fast-paced world filled with opportunity for those who know exactly how.
For those of you who are new, my name is Ross Hamilton, today's host and CEO of ConnectedInvestors.com. And today we have the privilege to learn from a man who has built a huge portfolio. As a matter of fact, he did one deal that he bought for $7 million and then refinanced it out for $15 million. We'll touch on that deal right there. Prior to his career in real estate, he's done a lot, but he owned a lot of pizza places, which will be fun to talk about. And that all changed when he read the very same book I read, Rich Dad, Poor Dad, and thought to himself, man, where has this been all my life? Passive income is what I need, not money in the bank. All right, I would describe our guest as very energetic. And today I'd like to introduce you to the one, the only Michael Blank. Michael, thank you so much for taking the time to speak with our members.
Ross, it's great to be here, man. Good to see you again.
See, now that you've decided, you've coined yourself as energetic, right? We were talking before the show. You have to bring the energy the whole show.
Now I got to go overboard with the energy.
Exactly. There you go. You got to keep it fun. And for anyone who's listening on the podcast, please jump over to our YouTube channel. Just search for Connected Investors, because there's a lot that we do throughout this show that you can't see when you're listening to the show. So make sure to visit YouTube and subscribe. And if you're on YouTube, hey, you want the podcast, go ahead and search Exactly How. So Michael, again, thanks for being here. We're going to dive right into how anyone can get started investing in multifamily properties. But prior to doing that, you contribute a lot of your success to your miracle morning routine. And I'm really excited about this because it's something that I've been refining. At the end of every year, I always relook at my habits, and my morning routine is one of those things. So why do you think that's played such a big role in your success? And would you mind sharing a little bit about your morning routine?
Yeah, first of all, the reason this is made such a big difference for my life is because most of us spend so much time firefighting all day long. And when you're in firefighting mode, you can't really, you're working in the business, but not on the business. So you gotta need a way to remove yourself from the business. And the best way to do that is in the morning. That's so early that there's no one else will think of trying to call you or schedule a meeting of that nature. I've always struggled though with that morning routine, like meditating, back to the energetic thing. I know it's hard to believe, Ross. I have a hard time sitting still, and therefore the idea of sitting still for more than a minute really stresses me out. So I always struggled with, meditating and being silent, though it's a very important practice. And the Miracle Morning is something that Hal Elrod wrote us a book on, and he really breaks down the 60 minutes in the morning and how you spend 5 minutes, 10 minutes, 15 minutes. It's a rhythm of, yes, silence, but also it's praying, it's visualizing, it's writing. All those things put together really allows you to reflect. And by reflecting raises your level of awareness. And if your raise your level of awareness, you become aware of things that you don't like and things that you do like or want to do. And that level of awareness is now necessary for you to change your behavior. And so in doing so, you notice things you don't like or you did wrong and you want to change or you want to accomplish. And then, when you visualize that, they then become goals, and then you start making progress towards those goals. So that's why it's helped me be a better person, just in general. If I said something to my wife the other day and I'm reflecting on that, maybe I should apologize or whatever the case may be. And it's really kind of transformed my life quite a bit. So that's my relatively new habit.
Oh, that's great. Yeah, and it's, you talked a lot about visualizing your goals, and just think about it from this perspective. You ever bought a car before and all of a sudden you see that car everywhere?
Yeah.
Right? It's the same thing with your goals. If you're visualizing your goals, all of a sudden you're going to see those clues that get you there because your brain knows what it's looking for. It's a magnet. You're basically helping yourself with those subconscious decisions that you don't even realize you're making. And the morning is so important. You're right. It's the only time that no one can really take from you. You can always get up a little early. The kids aren't there. The wife isn't there, the spouse, and you can really push hard. So thanks for sharing. That's a really good tip for our members. All right, everyone. What makes the Exactly How Financial Freedom podcast unique is every show comes with a detailed action plan. We're going to pull all the steps out of Michael's head and create a blueprint that you can visit and download on exactly how to implement what we're covering. Plus, during this show, if you're on YouTube, ask questions in the comments right there. Let us know if something's not clear. We monitor all of our YouTube comments very frequently. So that's a great place to reach out to us. So there's going to be a lot of key takeaways, resources, and free gifts mentioned during this call. And you can get it all by visiting exactlyhow.com. Also, when you visit exactlyhow.com, you can get entered into a drawing to win our pre-MLS software that locates every deeply discounted property you've ever heard of onto one beautiful map. And you can easily connect with the owners via text or phone, or if you want to do direct mail, you can do that as well. This is something we sell for $3,000. We're going to give it away to a lucky winner here today who went to exactlyhow.com. So if you're watching this on YouTube Live, go to exactlyhow.com right now, throw your name into the hat, you could win. And we're also in the description of this YouTube video, we're going to be giving away this book right here, the digital version, The Inside Guide to Funding Investment Real Estate. I'm sure Michael's going to talk about funding investment real estate. This is really the full soup to nuts, A to Z, a book I got paid a lot of money up front to write, and I want to give it to you. I can give away a certain amount of these. So check out the show notes on YouTube. All right, Michael, I'm really excited about this. Let's just starting from like a 5th grade level here, right? Someone who is, let's pretend for a second, we're talking to someone who has never invested in real estate, and they're thinking about, how do I invest in real estate? Do I do land? Do I buy houses? Do I do multifamily? Can you define what multifamily is for you and why it's been your real estate strategy of choice?
Yeah, look, I didn't start with multifamily, and unfortunately most people don't. And the reason is because no one or very few people do multifamily. And so when you go to the real estate investment meetings or the meetups, 99.9% of people are single family house investors. They're wholesalers, they're flippers, they're landlords, maybe they're lease optioners, if that's even a name, and then when you ask them about multifamily, like, oh yeah, that's cool. I tend to get there one day. I think I'm just going to buy one house per year for the next 10 years. And I'm going to take my experience and the money I make, and I'm going to graduate to multifamily. And it's considered an advanced strategy that requires lots of money and lots of experience. And 2 things are true, which at the surface people don't think are true, but very few people actually quit their jobs by investing in single family houses. That's myth number 1. Myth number 2 is that multifamily is an advanced strategy that requires lots of money and lots of experience. That is also not true. Now, I didn't come out knowing this up front. I discovered it through my own experience, but then in now, because we're coaching and teaching people to get started in multifamily, we recommend that people skip the single family house stuff, go right into multifamily. Now, if you're a single family house investor and you got a good thing going, you're a flipper, wholesaler, don't quit your day job, do things on the side. But the point is, it is not a necessary step to get into multifamily.
I like what you just said right there. I connected 2 different dots. You said, don't quit your day job. And for a lot of people, that could be wholesaling, could be like their job. And that's a hamster wheel. It's transactional, right? You're not building. The cash flow's there. It's a great way to get started. It's how I got started. Get some of those big fat $60,000 flip checks. But then at the end of the day, you want to put your money somewhere where it's just bringing you back more of its friends over and over again. And that's why multifamily is so important.
Yeah, and that was my experience as well. I was a house flipper. We flipped 3 dozen houses, and I made good money, which is the problem with that. Kind of gives you the golden handcuffs. The problem is it is a hamster wheel, and I realized a little bit too late that I just created my own job. Like, yes, I was now a real estate investor, and I was working for myself, which is an improvement over, say, a W-2 job. But at the end of the day, I can't just take 30 days off and travel Asia if I wanted to, because the wheels will start coming off. And so that was like, daggone it. My goal was wrong. My goal wasn't to be a real estate investor. My goal was to be financially free. I had also then gotten into an apartment building, and that was just, it was very exciting to do that first deal, and I kind of forgot about it. Meanwhile, it's sending me this check every single month. I'm like, dagnabbit, maybe I should do more of that and less of this. And that's kind of when I started to pivot.
Yeah. I will say this, on a previous podcast that a lot of you guys listened to, we interviewed a guy named Tom Cruise, not the actor. But he got into single family, and he went in and he would buy portfolios of, 10 to 100 single families at a time, which gives you the same effect of multifamily, right? It's just the buy and the hold, lots of money coming in every month, really important. So the strategies here are important. And what does it say in your shirt there? For those of you who
It
watch
says freedom.
It says freedom.
See, it says freedom. And inside the letters are made up of words, like different words, like law of the first deal, purpose, passion, legacy, stuff like that. This is kind of this is what I'm all about. I'm all about financial freedom with real estate, but it's not in the way that most people think, which is typically single family house investing.
Yeah. Hey guys, if you're watching this on YouTube or on Facebook or something, in the comments, go ahead and put down what financial freedom means to you. What does that look like when you get to take a deep breath? Like, where do you need to be financially? How much money do you need to have coming in that you can kind of do some of those things that you've always dreamed of? Well, great. Let's go ahead and jump right into this. Before Michael and I hit the record button here, we broke down investing in multifamily for beginners in 3 steps. Number 1 being learn how to overcome lack of experience. Number 2, raising money. And number 3, partnering. So Michael, let's talk about learning how to overcome lack of experience.
Yeah, I mean, the 2 main reasons people think they can't get started with multifamily without any kind of real estate investing. There's 2 main objections they have. There's other, but there's 2 main ones. Number 1 is I don't have any experience, therefore no one will take me seriously. That's kind of perception number 1. Number 2 is I don't have enough money to buy an apartment building, therefore I can't do it. And so let's talk about each of those kind of in turn. So if you don't have an experience, then how can you overcome that? Now, and here's another myth. I thought that my 3 dozen house flips actually gave me experience. So I would call up a broker and I would say, hey, I'm the man. I'm the house flipper man. Can you send me some deals? And he goes, sure, house flipper man. Why don't you send me your proof of funds and I'll send you what I got? And I'm like, at the time, didn't really have much of a proof of funds because of my restaurant debacle. So I'm like, crap, now what do I do? I can't get deals if I don't show them the proof of funds. What I realize now is I was approaching the broker all wrong. I was using the wrong language. I didn't have my team built. And it triggered in their mind their biggest fear, which is, oh gosh, I got a tire kicker on the phone. Let's try to get him off. Oh, I know. I'll ask him for proof of funds, which he doesn't have, and he'll go away. And that's exactly what happens when people come to me. Oh, Michael, I need a proof of funds. I'm stuck. And so to overcome that is you need to educate yourself. Specifically, you need to use the right language. There's certain insider language with anything you do, whether you're like sailing or playing golf or whatever. There's certain words that insiders use that outsiders don't know about or they don't know the meaning of, therefore they don't use. So you got to use the right words. And number 2, you really have to build a team. Back to point number 3 is multifamily investing is a team sport. It's not a solo sport. It's very much a team sport. So what I mean by team is you want certain team members on your team. For example, a property manager, a local property manager, a lender, a SEC attorney, a title company, whatever the case may be. You build your team. So when you call the broker, you are using insider language. And then you are referencing your team. So you're not talking about yourself. You're talking about Sam, who manages 5,000 units in whatever, Memphis. And then the broker goes, oh, Sam, yeah, shoot. He's a great guy. I've done like 10 deals with a guy. And all of a sudden you're talking about Sam, who manages 10,000 units in Memphis, and you're not even talking about yourself. And so you take that focus off yourself and your lack of experience, and you're really talking about your team members. The other thing you can do is you can have an advisory board or an advisor or a mentor that you pay or don't pay. And you say, oh, I'm working with Michael Blanc here, and he's my mentor. And, they own 1,500 units. And so now you're talking about in terms of your team. And then the magical thing happens is the broker does not ask you for proof of funds. The broker will put you on their list, email you a bunch of deals. And then the magical thing happens after a short while, which is where they call you with off-market or semi-off-market deals, which is really where the magic happens. So that's how you overcome lack of experience. And it doesn't take 10 years. It takes like 30 days.
So basically you're talking about strategically name dropping.
Yeah.
Right. But having like a good relationship with this person to where you represent more than just yourself.
That's right.
It's not just Michael. It's Michael and his huge, massively proven out team. Yeah. I've wanted to get in with those guys for a while. Michael's my foot in the door.
That's right.
And that was what you were describing. I realized I accidentally did back with my mentor, because everyone wanted to get in touch with my mentor. He was too busy. So I had to I was able to leverage his name in my own town. So
Nice.
that's a fantastic way to get over that lack of experience. And another thing you talked about, Michael, was really you're borrowing someone else's experience. If you don't have experience, borrow it. If you don't have money, borrow it. If you don't have time, I don't know, you can borrow time as well. So it's really about kind of
you can outsource.
filling in those blanks, no pun intended. Michael Blank. Yeah.
And then the other one was, what was the other one? Raising money, right? Like,
yeah. Well, hold on. But before
we're not done yet. Okay.
Yeah. Is there anything else that you want to talk about when it comes to learning how to overcome lack of experience?
You know, that's really it. It's surprisingly easy. I think that maybe the only thing I would add is part of the lack of experience is confidence. You have a certain confidence that's lacking. And when you speak to people, they can tell that you don't have confidence. And that comes with, again, education, knowing what you're talking about. And it comes with, if you have a team behind you, you can have a certain confidence because you have a team behind you. The other one is comfort zone, right? The size of your comfort zone, right? If your comfort zone is 2 units and you're calling on a 50 unit, you're going to be a little shaky and your confidence is going to be shaking. So there's ways you can expand your comfort zone. And one of the great ways to do that is to actually visit some of these larger properties. Literally go over there and tour these properties, speak to the property manager, speak to the broker. And then before you know it, after visiting a few of these, they don't seem so big anymore. All of a sudden your comfort zone expands. And I don't need to build up a portfolio of 10 rental properties to do that. It's a shocking how quickly that can happen.
Yeah. You know, and you were talking about kind of like the self-doubt in people's head. And you were saying, you know, I think I can. I feel like a lot of people, they go into and they say, I think I can't, I think I can't, I think I can't. And then they're right. Yeah, they're right. You guys can do this. It's not rocket science. It's really about getting in the game. So we talked about learning how to overcome lack of experience. We've identified if you don't have a lot of experience, which is what this show is tailored towards, then there were some good takeaways there. So if you liked what you heard, go ahead and comment below, share it, give us a thumbs up. Your engagement is really what fuels us. So now let's talk about raising money as a beginner in multifamily.
Yeah, and you're the master at raising money and financing and providing financing. And for a first timer, this can be kind of a daunting task because they think that they don't know anyone with money, or they are uncomfortable in taking money from friends and family, and they really don't know how to raise money, or they don't really feel like they want to be begging people for money. Like those are all some of the things that are going through people's minds around raising money. And the good news is they're all myths and mindset issues that can easily be fixed. I just find that when people see the process for raising money, it's not very complicated, right? And I'm just going to describe it real quick. First of all, you do have to educate yourself. It all goes down to that. And there's all kinds of great training out there. We have training, but there's other training as well. You got to know what you're talking about. And you do have to have a certain degree of confidence, because if you don't, your investor will go, oh, that's interesting, Ross. Well, why don't you send me your resume and I'll take a look at it. And again, a sign that you didn't sound very confident when you approached them. On the other hand, if you do approach them from a confidence, they're very interested. Now we have a very interesting product to sell. In my opinion, the best investment product on the planet, which is investing in syndications. And that is because this investment produces cash flow, which stocks don't do. It has an above average consistent return, which stocks tend not to have. And it has tax benefits that are extraordinary that stocks don't have. And so the investment vehicle that we're proposing is going to be very attractive to someone who is looking for consistency in their return, who's looking for a passive income in their return, and who's looking to pay less taxes. You can help people with those problems.
Yeah. And let me just talk about the tax benefits thing, because I know that, when I first started and I wasn't making any money, I'm like, who the heck cares about taxes? I don't pay any taxes.
Yeah.
Then all of a sudden, when you have to start writing, there are successful people that will write multi-million-dollar checks to the IRS every year. And it just pisses you off, right? Because you know that there's ways around that. You're not doing the right things, and real estate is really one of those tax shelters. So when you're talking to someone who owns their own business, right, and is very financially is stable, that tax button is a hot button. It really is. People always want to limit their tax liability. So I don't want you to overlook that, because I've been on both sides, and it sucks. when you have to write that big check out, because you know if you had more real estate or you were doing things slightly different, I'd almost rather lose it than give it to the damn government.
Yeah, that's why you talk to a dentist or a doctor or an attorney when you talk about, hey, paying less taxes. They're like, huh? What?
Yeah.
How do you? Now they're leaning in, right? And now you can educate them about syndications. And 99% of the people only know stock market and mutual funds, bonds, right? And they have disadvantages over things like syndication. So you have an opportunity to educate them, and you don't even have to be a salesperson. You just have to be an educator, and you have to educate them about this thing. And it's a process that you go through, and you essentially you're not selling so much. You're really sharing your enthusiasm.
Yeah, absolutely. And you know what? I'll make sure to put this in the video description. But we did a podcast about how to identify people that had large IRAs and approach them to invest that into, into real estate. So I'll make sure to have that in the description of this video here, because it really ties in with raising money through IRAs in an interesting way. And again, we're also going to give you this book. And Michael, I noticed you have a nice microphone there. Do you have a podcast or anything as well?
I do. But it's magically called apartment building investing.
Okay.
Yeah.
Good.
That's kind of what I do.
So we'll make sure to have a link to that as well at Michael's page at exactlyhow.com, along with all of his resources and anything else that we talk about in all the notes here, because we can all dive a lot deeper on this stuff, but we're here just to kind of get you pumped and get you step 1, 2, and 3, and then you can fill in all the blanks as you go. So let's talk about partnering now. We talked about learning how to overcome the lack of experience. Actually, raising money. We should probably talk a little bit more about raising money.
Well, yeah, we can. I mean, I think the comment about IRA is a good one. I remember having a conversation with one of my neighbors, and I had this hour-long conversation. I said the minimum is $50,000, and he goes, "Yeah, I don't have that." I'm like, "Damn it! I just wasted an hour of my life with this guy." He goes, "Well, you can invest with the IRA," and he goes, "You can? Is that legal?" I said, "Yeah. Why?" Because I got like $500,000 in my IRA, and so you have this. You have this, sleeper money in IRAs, and it's a great way to raise capital. But it's really a way where I'm going back to not raising money so much, but really in sharing your enthusiasm with people. I think is probably the best way to describe the money raising process. If you try to quote raise money, people can sense the fact that you have some kind of agenda. You want something from them, and it's not going to work as well as when you say, "You're not going to believe this. I'm getting into this thing, and this is the benefits of it." And man, do you know someone who might be interested in a short conversation about this? Yeah, would make you pay less taxes and give you cash flow? And they're like, "Well, me." Or they might say, "Well, my brother or my boss," right? And so, "Oh, well, that's great. Would you mind doing providing introduction?" So you do this word of mouth thing, and this is how you basically reach more and more people. And then you just stay in touch with them. And then when you actually have a live, and then what you do is you give them a sample deal package, right? So in that conversation, you create we call it a sample deal package. It's an investor package from a real property, but it's not something that you have under contract or purchased, but you make it look like it is, and you use it as a conversation piece. And you get all the major questions and objections out of the way. Why should I invest in multifamily? Well, why should I invest with you? What are the risks? What's the returns? And you get all this stuff out of the way up front. So when you get a live deal, when time is of the essence, you call up your buddy and go, "Remember the conversation we had last month?" "Yeah." "Well, I got a live deal." I said, "Great. Well, send me the deal package." And it looks just like the other deal package. Of course, the words are different, the numbers are different, but they're not going to ask you major questions. They might ask you a few minor ones, but then within 5 minutes, they're like, "Well, remember you told me you've been interested in investing $50,000. If I find a deal that looks a lot like that, are you still interested?" He goes, "Yeah, I'm in." And so within a matter of days, you can raise your money from people who have already given you a verbal commitment before.
And listen, this is huge, because what Michael just shared with you is how to get someone to agree to a theoretical deal.
Yeah.
People always agree to it. "Oh yeah, that sounds great. Sure." And then when you talk to them again, they've already agreed to that. So now you've entered the conversation with it being their idea, not your idea. "Well, you said you wanted this. Here it is." "Okay, if you don't want it anymore, that's fine." There's a lot of other people that, that would. So that was a great takeaway. Michael, you wouldn't happen to have, a sample deal package that you might be able to share? I don't know if that's something you sell, or I know our members are probably going to light up the board asking for it.
Yeah, we do actually. It's in the appendix of my free ebook that we have. It's called "The Secret to Raising Money to Buy Your First Apartment Building." Perfect. And it's at themichaelblank.com/ebook. And it's in the appendix, because I talk about this methodology And then people are like, well, can I see a sample? I said, yeah, as a matter of fact, there is this one at the end. So
Cool.
that's where people can find it.
Well, we'll have a link to that at exactlyhow.com. So you can go ahead and pick up that sample deal package. I mean,
Thought you
that's
stumped
huge.
me on that one.
Yeah. Thanks so much for that. Well, great. We're going to get into the partnering side, but before we do, I have to announce the winner of the software who went to exactlyhow.com, entered their name into the hat, and is now the proud new owner of a software that's $3,000. It helps you locate multifamily deals, apartment complexes, off-market deals, and the contact information of the owner. Plus, it has funding attached from private lenders. Not the same type of funding we're talking about here, but definitely a good source. And the winner of today's software is...
Looking for a private money partner to fund your flips or rentals? Go direct to the source. Privatelenders.com, a free marketplace that instantly matches you with up to 5 private money lenders to save thousands by having non-bank lenders compete to be your funding partner. Privatelenders.com.
And the winner of today's software is Billy Dexter. Billy, congratulations. We'll be reaching out to you, getting you all set up with PIN. For everyone else who didn't win, in the description of this video, you can go ahead and click on a link, and you can see a whole demo of it, what we were talking about. So, well, great. Let's talk about partnering.
Partnering is a great way to accelerate the entire process. So we see people doing deals within 3, 6, 9 months of actually getting started, not having done a single deal before. And it's because of the power of this of the nature of this multifamily vehicle. What I love about it is so many different ways you can get involved. Let me give you an example. Certainly, you can be a passive investor in a deal. We've been talking about that. Best investment vehicle on the planet. But there's also obviously active ways you can get involved in it. But the classic way is kind of you do everything. You're the classic syndicator, as they call it. So the syndicator finds a deal, they raise the money, they hire the proper manager, they manage the whole thing, and they just do the whole thing. And I'm not saying it's a dying breed, but certainly there are other career paths that are equally lucrative and do the same thing, which is generate cash flow so people can quit their job and become financially free. So let me give you an example. Let's say you are very strong with spreadsheets and underwriting and analyzing deals and making offers. You love hunting for deals. Then you could be a great deal finder. In this environment, finding great deals is a real challenge. There's actually more money than deals right now. So the value of that deal is actually fairly valuable. And for that, you can bring that to an experienced operator, for example, and they will partner with you because you brought the deal. Let's say the thought of Excel spreadsheets makes you want to vomit. But you're a relationship person and you love to network, play golf and with doctors, and you really love sharing your enthusiasm about this new investment vehicle. So you become a capital raiser. So your specialty is becoming raising capital. Well, capital, obviously there's value in capital. And so we see a lot of joint ventures happening between deal finders and capital raisers. And then there's a third kind, the experienced operator, right? Track record is so important. And so the capital raisers align themselves with experienced operators who might align themselves with deal finders for deal flow. And so therefore you can wear these different hats. You can play into what you love to do, what you're good at, and you're still getting equity, you're still getting passive income. And now the capital raiser would never be able to do a deal themselves because they're not getting any deals, and the deal finder can never raise the capital. And so they come together and now they're both doing deals. And that's what I find so special about this.
That's fantastic. Yeah, I mean, there's nothing, the shortcut to success is partnering. I mean, what's the shortcut to success? Well, finding the right partners. I mean, again, you get to kind of start where they are. You get to, draft off them. Good partners, good relationship building is really important. Again, the gentleman we were talking to who buys 100 properties at a time, he finds most of his deals through networking, through partnering. So this is a common thread throughout all of the episodes here on how new people are able to get started. And what was great, Michael really just broke it down to, hey, you can be up and running, starting to make some money in, the next handful of months here. So that's really encouraging for a lot of people that have been on the sidelines. You don't have to start fixing flipping. You don't have to do what they do on A&E. You can start with cash flow. Because listen, when I look back at all the properties I flipped, and Michael, maybe you have the same thought, I wish I still had all those darn properties. I'm like,
but then I have to manage them all. And I'd have a portfolio of 36 houses. Oh my gosh.
Yeah. Well, great. This is one of the most important questions here I want to ask you. Michael, what do you think your life would be like if you never found that book and started to invest in real estate?
That Rich Dad Poor Dad, that really ruined my life. Is that what you're talking about? That book?
Yeah.
So I made it, just so you know, I made a bunch of money in a software IPO, right? It's kind of my background. So it was great. We went public in 2000, and then I read this daggone book in 2004. I'm like, oh, this is great. Let me get me some cash flow and some passive income and some financial freedom. Unfortunately, I got into restaurants. At the time, this was a good idea, Ross. Trust me on this. It was a good idea, but the recession kind of changed everything. And it subsequently lost my IPO millions in the restaurant debacle and clawed myself out using real estate. So had I not read that book, I probably wouldn't have lost all my money. So on the other hand, I wouldn't be where I am today, right? So I think what it did for me is it really opened my eyes about the idea of financial freedom and what that means financially. Because my financial plan was the traditional one, like so many people, that's basically making as much money as you can, saving as much money as you can, and then retiring, as soon as you can. That's like the classic plan. When I read that, I'm like, no way. Like there's another way to do it, a better way to do it. And that was fundamentally, obviously, what changed it. Now, you could argue with my strategy and how to get there. I would argue with myself about that. But again, hey, I can't change it. And it made me who I am today. So I'm grateful for it.
I'm a little confused here. You read Rich Dad, Poor Dad, and what your takeaway from that was to go open pizza places?
Oh, yeah. Ross, come on. You can't follow this logic.
You didn't just jump right in because real estate was a big part of that book.
It was also cash flow business. Yes, it was. Yes. And I did flip a couple of houses back. It was a kind of a hobby, but my cash flow business, my retirement plan was literally restaurants because they are cash flow businesses if they actually make money. And they did for a while. And I did actually hire someone to run it all. And I actually was semi-retired for about 2.5 years. Okay. Yeah. So it did work it did work. But again, there's fundamental flaws in the restaurant business in general, and the recession simply accelerated those flaws for me.
Well, it got you into real estate, and now you're doing well, and you're helping so many other people advance themselves. And you spend time on podcasts like this. So I'm sorry you lost that money, but I'm also glad you did.
That's right. So am I. I feel the same way.
Yeah, exactly. Like losing all of your money and then clawing your way out is one of those things that you're glad to have done. But at the time you're, one of the biggest things that everyone needs to kind of check themselves at is don't beat yourself up. People are so hard on themselves. You'll sit there and you'll call yourself all sorts of things you would never call other people, and you're just beating yourself up. That is never going to lead to anything positive. It's the most successful people are people that fail their way to success. There is one thing that all successful people have in common, and it's a trail of failures, right? So if you're trying and you're failing, you're on the right track. I know it sounds crazy, but it's really all about getting in the game. So thanks for sharing that little rags to riches story there. I had a similar one myself. Maybe I'll share, but Michael, do you have just a little bit more time to go over the rapid fire section?
All right, bring it on.
All right, man. I'm going to ask you a question. Just the first thing that comes to your mind. On a scale of 1 to 10, how strict were your parents?
I don't know. 5, 6.
Get up early or stay up late?
Get up early.
How many hours of sleep do you get?
8.
Favorite or most recent book that you read?
I just read Traction.
Dude, I have that one on my list.
Dude, it's going to change my company.
Oh, great. Okay. It went to the top of the list. That's great. If you could be any superhero, who would it be?
Oh, I don't know. I really don't. I have no idea.
Skip.
Skip. Pass on that. Superman? Woohoo!
There you go.
He wears a shirt? I don't know. No idea.
What is something everyone should do less of?
Spend time on their phones, swipe Facebook, watch TV, stupid stuff.
What is something everyone should do more of?
Yeah, miracle morning routine.
Bitcoin, bang or bust?
Oof, bust. That's only because I don't know enough about it, so it's ignorant speaking.
Will people live on Mars in your lifetime? No, visit Mars. Will people visit Mars?
Probably.
I don't
know. What do you think?
I think so. I like to follow Elon, and I know
he's crazy, but he gets stuff done, doesn't he?
He's selling one-way tickets to Mars for about $250,000.
One-way tickets?
He can get you there. He can't promise. At least he's not pretending like he can get you back.
Oh my gosh.
Sending people there in pods to start colonizing, and maybe they'll figure out how to get back. But all right. Well, hey, thank you so much for spending time with us today.
Ross, this has been great. It was fantastic. Thanks for having me on the show.
Yeah. And guys, we're going to have all of Michael's resources, links to his podcast, links to that awesome free giveaway that you all need to go get at exactlyhow.com. Go ahead and visit that. And again, throw your name in the hat. Maybe you'll win next episode's software and have access to that $3,000 piece of beautiful machinery. So anyone who is still here, congratulations. You made it to the end of the show. You actually finish what you start. That's a great trait to any successful person. If you found any value, give us a thumbs up, a like, a share. Your interaction is really what fuels us. Maybe you know someone who needs to watch this. We're really excited to have you here. Again, make sure to visit YouTube, jump into the show notes, get your free book and a bunch of other stuff. And I'll talk to you on the next Exactly How YouTube and podcast show. Bye-bye.
The Connected Investors app connects you with investors, notifies you of available properties, helps locate cash buyers, and secure private funding to close deals. Set up in seconds to become a member of the Connected Investors social network. Now you can scroll through your main feed to find cash buyers, see investment properties not available to the general public, and network with investors by adding your own comments to a thread to keep the conversation going. The Control Center is your connection to add properties to sell, start new discussions, connect with local investors, and even find private funding. The Notifications tab will keep you alerted to new investment properties and offers. You'll also find new friend requests to connect directly with the community to build your network. From the property marketplace, you'll be able to find, favorite, and make offers on investment properties. Download Connected Investors today to find, figure, fund, and flip investment properties on the go.